In this week's video, I will be talking about WHLRD preferred shares, and check it out. Hey everyone, welcome back to another edition of my YouTube channel on special situations investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. Welcome back everyone. During my research this week, I came across some paperwork, some documents about WHLR preferred shares, their preferred D class shares, and I spent a lot of time looking at this company because it had a really interesting setup, and I thought that it, if anything, at least it would be interesting to look at. So let's dig into it and just see what we can learn about WHLRD preferred shares. WHLR Real Estate Investment Trust is a self-managed commercial real estate property, and they are based out of Virginia. I think it's Virginia Beach that they're out of, and they have Virginia Beach. And the company's business is based around the idea that they're investing in shopping centers that are anchored by a grocery store. And it seems like a pretty good model, an interesting model to say the least. Probably one that has some stability even during COVID times. They have about 75% of their stores in the North Carolina, Virginia, and Georgia markets. And then they have the rest in some of the neighboring states to those three main core areas. On the 14th of May 2021, they should be completing the repurchase of about $12 million in preferred shares for their D-class preferred shares. Now, this represents about 18% of the total overall shares outstanding for their preferred class. And it's got a lot of interesting things that are setting up with this. I am not participating in the tender offer, in full disclosure, because I didn't find this in a time that I felt like it was worth my time to purchase. The preferred shares are a par value of $25, but they're buying them back at about $18. And so some of the estimates that I've seen on doing my research indicate that this indicates almost a 20% cash-on-cash return for anything that they are able to repurchase the shares on WHLRD preferred shares. And so it's been interesting to watch, to observe what's going on with this, and I think that there is some value here over this special situation. You should note that if you do decide to enter into these preferred shares, normally preferred shares include some sort of dividend payment. However, the dividend payment with this one is suspended, and it's been suspended since 2019. In December of 2018, the company announced that it would no longer be paying preferred dividends. They ran into some financial issues, and the 8.7% coupon rate was bumped up to 10.75% coupon rate, and it's all been in arrears. And so the dividend continues to be paid on it, or does not continue to be paid on it, but it continues to accrue on these preferred shares. However, the company does seem to be in a situation where they're able to pay or buy out and knock out some of these preferred shares, and they've been doing that over the past several months. Last I looked at it, it looks like about $18 million of preferred shares have been repurchased since the first of the year. If they buy another 12 million in this most recent purchase situation. 18 million represents almost 20% of the total. It represents a significant amount, maybe 20 to 25% of the actual preferred shares that are out there, and so it's a great one to. They're getting a great deal on this. Of course, this is highly speculative if you do get into it, but it's something that if they are able to pull this off, it would be very good for preferred and regular shareholders in the company. If you're interested in learning more about this situation and some of the things that are going around it, I highly recommend that you read Robert Lewis's September article on Seeking Alpha. Read through the comments in that article, because the perspective that some of those investors have are interesting and of note, and probably something that you should be considering before you invest in it. I also recommend that you spend some time looking at the most recent 10Q. And the 10Q has some of the covenants that are associated with the preferred shares, the preferred D shares. One of the things that I saw reading through those comments is that if the preferred D shares aren't taken out, they will basically wipe out all the other equity in the company, and which would not be good overall and does not provide a very good base for investors. However, it does. These preferred shares do have a significant number of different covenants, and one of those in the notes section, it talks about how the preferred shares have the ability to, if they don't receive dividends over 6 consecutive quarters, they can go back and they can buy 20%, or they can get, with 20% of the preferred Class D shareholders, they can go in and they can get 2 new directors to the board, and they can elect them themselves. So there is some level of downside protection in that. I don't know how much that really would be, but it is something that is interesting to observe and to look at this moment. At $18 a share, I think that this is kind of a speculative entry, and I am treating it as such. In full disclosure, I have purchased at about $18 a share in these preferred D shares, because I find that it might be something of note, and more importantly, I just want to be I want to follow the story. I expect that if you are interested in this investment, you might have about 2.5 years before you get a full realization of your investment back from it, and that it should probably be, if you get full payment back on the par value and all of the dividends on the shares, you'd get about 21% per share. However, you should be aware that it most likely will not get to that point, but it might turn out to be a little bit less with it. As a way to protect some of the downside, Daniel Koshaba, he's the current CEO of the company. He just barely was put in about a year ago. He owns approximately 10% of the company, and he purchased it himself. Now, is that a lot of downside protection for you? I don't know. Daniel Koshaba did have a pretty significant or successful previous extent in investing, and in particular investing in real estate and like breaking up companies and stuff like that. And I would imagine that he's able to either turn around this company or get decent deals for the assets of the company. He probably doesn't need to be successful in this investment. It represents about $4 million and to him right now, and he's had several years of successful investing situations all the way back to Salomon Brothers in the 90s. So it might be a rags to riches type story with this, or it might not turn out to be anything. So just to be aware of that with Daniel Koshaba. The other thing to think about is, if Wheeler remains solvent and they're able to then pay back or pay for these shares, then in the 2023 in September, you will be able to sell them back at $25 per share, And so there's already met a little bit of baseline protection in that area. Well, the baseline protection if you get the full price of the shares. I personally think that this might be an interesting thing to watch over the next couple of years, and just find it to be a fascinating setup. And that's the reason why I've put a little bit of money into it. This is not a significant portion of my portfolio. This isn't even a half of situation where I don't have 5% like I normally try to make on an initial investment. This is me just, I put a little bit of money aside just because I want to follow this story, and that's one of the ways that I keep up with things. With that in mind, I have one final thing that I wanted to share with you guys. This week is the official week where 100 of you have made the commitment to subscribe to this channel, and I am super excited. I'm so grateful for those of you that have done that. Please know how much I appreciate your support in this. With that in mind, after 100 subscribers, I decided that it would be kind of fun to invite you to let's assign some sort of name to ourselves with this. I have my own ideas, but I wanted your thoughts on what kind of name we should call ourselves. So please comment below what kind of name I should use to call those of you that have made the jump to subscribe to this channel. As always, if you haven't already subscribed, I would appreciate you coming along for the ride. And if you like this content and you find that it's useful, please go ahead and hit the like button so that other people can also see the content that we create here. With that in mind, thanks a bunch for watching, and we will catch you next week.